we're going to keep it kind of focused a little bit because if you join our weekly webinars, you know I have a tendency to ramble on, and I want to make sure that we have time at the end for questions. So what we present today will be part of the adjustment, I would say, and then I think we probably will dive a little bit deeper into this topic in the August conference. But with that said, let's get started. So this is our forecast for U.S. renewable diesel production capacity and capacity utilization through the end of 2022. And as you can see, it grows pretty dramatically over the next year and a half. Basically, we expect 6 renewable diesel plants to begin production or expand capacity in 2021, and then in 2022, 7 plants to do the same. That's going to raise capacity from about 535 million gallons a year at the beginning of 2021 to just over 2.75 billion gallons per year by the end of 2022. You can see here from the capacity utilization line that our forecasts for actual production relative to capacity are a little bit conservative compared to the actual realized data, which is the line that moves around quite a bit more than our forecast does. And so there's sort of much as we expect production to increase over the next 2 years, if our forecast of capacity expansion is correct, there's further upside room in the production forecast, I would say. I would say that the chances that production is substantially below our projections is probably lower than production is above what we're forecasting. So all of that production obviously is going to require feedstocks, and this is our forecast for feedstock demand by type, broadly defined as vegetable oils, and then fats and greases, low CI or FOGs, whatever you want to call them. You can see we set a record here for renewable diesel feedstock usage in March, but then with the sharp increase that we've seen in the HOBO spread and the relative impact that's had on profitability, we saw a little tick down in production in April, and that implies a decline in feedstock demand. But this should be just before we kick off climbing up this big mountain of demand. A lot of what renewable diesel stories in the news will focus on is the demand for the low CI products, because most of the LCFS type programs reward low CI feedstocks more than they do traditional vegetable oils. But ultimately, vegetable oils are going to have to provide the bulk of the feedstocks, and of the vegetable oils, soybean oil is going to provide the bulk of is going to allow the increase in capacity. And so we have soybean oil as a percentage of the total feedstock mix rising from about 33% at the end of 2020 to 66% by the time we get out here into the end of 2022. And that is obviously going to have a substantial impact on the U.S. soybean oil balance sheet. And so this is our forecast for the next couple of years of the U.S. soybean oil balance sheet. You can see here that that soybean oil usage in all biomass-based diesel production is going to just about double by the time we get to the end of the 22-23 season. And that has implications for other uses of soybean oil, primarily for non-biofuel, obviously, and for exports. Exports is probably the easier one to cut, and we had predicted for a while now, we've been predicting a sharp decline in exports in 21-22, and with USDA's May WASDE, they kind of confirmed our trend. I think they're at like 1.45, so they're about 200 million pounds above us, but it's still a substantial reduction relative to where they are in 2021, and it kind of confirms the trend. And it seems like an obvious thing, but when there's such a substantial change, you never quite know whether people are going to kind of come along with you. The less clear reduction in usage, at least in my mind right now, and maybe the biggest unknown in the balance sheets, is non-biofuel usage. So you can see that we're predicting a slight increase in non-biodiesel usage from 1920 to 2021. If 1819 were on here, the decline from 1819 to 1920 was about 1 billion pounds. And so for 2021, we kind of started off relatively low. We had this at about, I think at our lowest, we were probably about 11.4 billion pounds, and we've slowly crept up just based on the monthly data that we've gotten so far for 2021 to 13.4 billion pounds. To me, that kind of says that the floor for non-biofuel usage is probably about 13 billion pounds. We don't show that in our forecast yet, because to do so means that we would have to make some difficult choices that, again, aren't quite so clear yet. And we want to make sure that we understand this a little bit better before we start to project it out for the next couple of years, so we don't whip our forecasts around, raising and lowering our projections on a monthly or quarterly basis or whatever. And so right now we're going with 11.4, but I think that there's a good chance that by the time that we're done with 2021, this will probably be closer to 13, and 13 may actually be the number that we have to use going forward. The reason for this is that for a lot of non-biofuel applications, soybean oil is a very small percentage of the overall cost structure. So while those companies obviously don't want to pay more for soybean oil, it is easier for them to pay more and either absorb the increased cost or pass the cost on to the ultimate consumer of their product, whereas soybean oil is obviously a substantial component in renewable diesel's feed cost structure. And so I don't know that ultimately renewable diesel, biodiesel, or co-processing is going to be able to crowd out demand at this level. If they don't, then I think that this export number probably will be lower than we're projecting right now. And I also think that imports could be higher than we're forecasting right now. Stocks at 1.1 or 1 billion pounds is pretty close to pipeline levels. We might get a little bit lower than the 1 billion pound level, but it's tough to envision that we would be substantially lower. And of course, if we're going to add, 1.6 billion here, we obviously can't take stocks down below zero, and they wouldn't get to zero anyway. So we've got to look for other things that will offset the increase in demand from biodiesel manufacturers or producers. The other thing that I would note is that for 21-22, we have a crush forecast that is about 125 million bushels above where USDA's initial forecast came out. There are expansions underway, and we have a new report that kind of details those expansions, both at the crushing level and maybe more importantly for biofuel producers at the refinery level. If our production forecast is too optimistic, again, that's just more pressure on these other demand categories outside of renewable diesel. And so the 21-22 balance sheet is going to be one that is going to be really interesting to watch and see how it develops throughout the year. And by the time I think we're through the 21-22 season, I think we'll have a much better handle on exactly how all of this is going to shake out. And that will inform our opinions about 22-23. The one thing that I would note is that if we do ultimately have to take imports up a little bit more and exports down a little bit more, that would make the U.S. a net importer of soybean oil. And I think that that development could start a conversation about the impact that biofuels are having on production. I don't know that it would result in any changes, but I think that generally people in the U.S. and the U.S. farm industry, we think of ourselves as net exporters of food and not necessarily net importers of food. And so while I'm not trying to say whether I think that's a good or a bad thing, what I am trying to point out is if we do get to the point where we're actually a net importer of soybean oil, I think that could have I think that could spark some conversations that we're not having today, at least. All right, so just a little bit deeper dive into non-biofuel usage to try and figure out exactly what might happen. This is quarterly non-biofuel usage going back to the beginning of 2020. And you can see we had the drop down because of the COVID lockdowns, but we've come back, and for 2021, we're back above where we were a year ago. And like I said, non-biofuel demand has remained stronger than we had anticipated. We do think that it probably slows down, and it tends to slow down a little bit seasonally going through the next couple of quarters. If we do get the slowdown, at least that we're projecting right now in 21-22, we think canola oil is probably going to be the biggest beneficiary in terms of demand from that slowdown. We think end users will probably backfill with canola oil. Corn oil and palm oil are also substantial contributors to non-biofuel usage in the U.S., but I'm not sure that I expect either of those to grow significantly if we get the decline in soybean oil usage that we're projecting right now. The assumption that canola oil will be the main beneficiary does come with some challenges. Probably the biggest is just the spread between the price in soybean oil and canola oil. And again, for a lot of the end users, the cost is still a minor portion of the overall cost structure, so they can probably absorb that spread a little bit better. The other is the potential for the EPA to approve a pathway for RIN generation in renewable diesel production from canola oil by the end of 2021 or in early 2022. I don't think that means that all of a sudden there's going to be a lot of canola oil that is used in renewable diesel production, at least broadly across the United States. But if you look at the West Coast and a lot of the new plants that are coming online in the West Coast, it's easy to ship canola oil down from Vancouver. And so I think that there is some potential for expansion in those markets, but I don't think that necessarily will have a huge impact on the overall canola oil balance sheet. But if that does occur, and we're kind of expecting it to occur, there could be a little bit less canola oil that's available to sort of backfill any decline in demand in non-biofuel usage from soybean oil. In that case, then it's really probably, oddly enough, it may be up to palm oil or sunflower oil or one of the other minor oils to step up a little bit. Palm oil would probably be the most likely just because of the cost differential. Corn oil, it's tough to expand in non-biofuel because there is substantial demand from biofuel producers, and generally it's looked at as more of a low CI feedstock than other vegetable oils. So it's unlikely that corn oil will step up. So it's kind of these people might be a little bit between a rock and a hard place between choosing relatively higher cost canola oil or palm oil. So then just to kind of switch over to exports and the impact that the growth in soybean oil usage and biofuel production will have on exports, you can see that the rise in prices, in particular in the U.S. And in the U.S. relative to Argentina, has put the brakes on U.S. export sales, with commitments essentially flat since the beginning of the year. We were on pace to be well above where we were last year, and now we're at the lowest level that we've been in terms of commitments over the past 4 or 5 years. And this is a trend that is likely to continue. Right now, we're forecasting 2021 exports at 2.2 billion pounds, but there's a couple of different indicators that we look at to kind of guide us in our forecasts, and those are suggesting that right now even we could reduce that number to 1.9 billion pounds pretty comfortably, and probably not have to raise it or raise it substantially over the balance of the marketing year. And so again, this trend is probably going to continue. So what happens to the soybean oil that we aren't exporting? This is where we generally export soybean oil, which is mostly to Western Hemisphere countries. The lone big standout is South Korea. They're the largest importer of U.S. soybean oil, and definitely the largest outside of the Western Hemisphere. And you can see that South Korean demand has grown steadily, but we expect a slowdown in that in 2021, and generally expect a slowdown in all of the Western Hemisphere countries as well. If we cut our projections further, we probably are going to, the impact on South Korea is probably going to be larger than the Western Hemisphere countries, just because it's probably a little bit easier for those guys to switch to palm oil from soybean oil. For a lot of the Western Hemisphere countries, we expect that they will just switch either to palm oil or more likely to soybean oil out of Argentina. And with that, here is where Argentina exports soybean oil to in the Western Hemisphere. And you can see that that other than Peru, they don't really ship a lot of soybean oil to Western Hemisphere countries, or traditionally they have not. The biggest importing countries for Argentine soybean oil are India, Bangladesh, Egypt, and then other African countries take more soybean oil from Argentina than Peru, and in India's case, substantially more than Peru, and probably more than Peru and the rest of the Western Hemisphere countries combined. But you can see from our projections for 2021, we expect that those shipments will increase, some from relatively low levels and some from essentially zero over the last couple of years. Now, the big risk to Argentine exports is always whether farmers will sell enough soybeans for the crush volumes to meet our forecasts. The Argentine crop was down this year about it was down to about 45 million tons, which is a pretty substantial decrease from last year. And Argentine farmers tend to hold soybeans as a hedge against inflation or against other economic uncertainty. We think that given the the price outlook for soybean oil and the price outlook for soybeans, that Argentinian farmers will be more willing to sell than they traditionally are. Although I would say that I met with a group of Argentinian farmers several years ago, and I asked them sort of at what price would you just absolutely sell your soybeans? And to a man, they said that they wouldn't sell their soybeans based on price. If I could tell them what the inflation rate in Argentina would be, then they could tell me what price they would sell their soybeans at. And so it's not a guarantee that Argentinian farmers will come through and sell sufficient supplies to meet our crush forecast, but we expect that that they will. The other part of Argentinian consumption, or the other substantial part of Argentinian soybean oil consumption, is generally been in biodiesel production. Argentina has a 10% national domestic blend mandate, but they're also a substantial, or historically have been a substantial exporter of biodiesel. However, last year, the combination of the pandemic and some developments that have shut off some key markets for Argentina really reduced the amount of biodiesel that they produced and the amount of soybean oil that was consumed. We calculate that the Argentinian blend rate actually fell to about 3.9% from about 8% in 2019. That was obviously the lowest it's been in years. The USDA attaché estimated in August that the blend rate would be about 8.2%. But based on the data that we get from INDEC for domestic consumption, we calculated that number at 3.9%. So I think there probably is some room in between those two estimates, but I think it's fair to say that no matter which number is the actual correct number, that there was a pretty substantial decline in the blend rate in domestic consumption. Now, the biofuel mandate law expires this month in Argentina, and there is some talk of renewing it, but at a lower level, potentially reducing the mandate from 10% to 5%, which would allow more soybean oil to be exported or more biodiesel to be exported out of Argentina. We think that over the next couple of years, that translates into more soybean oil exports if they go that way. So for 2021, we're essentially assuming a 5% blend rate. And then for 2022, we're actually assuming an 8% blend rate. We think that as things start to get back to normal and as demand starts to pick up around the world, that there's a potential for a higher blend rate. There's also some uncertainty about exactly what's going to happen with the law. So we're going to go back to kind of what we think the average might be for 2022. If it does tick up to 8%, obviously that cuts the amount of soybean oil that's available for export slightly. But you can see that we expect that a lot of the soybean oil that's not exported out of the United States will be exported out of Argentina, so that the world trade flow balance doesn't really look that different from a do importing countries have enough soybean oil level. It's just a shift in where that soybean oil comes from. One thing that I would also note is that the imports that we're projecting for the US, some of them would obviously come from Canada, but some of them would also probably come from Argentina. The Argentine to the California markets, ARB has been open, and so it's been profitable to ship soybean oil from Argentina into the California market for a little while now, and there have been some cargoes that have been booked in the last 6 weeks or so. And we would expect that that will probably continue for the foreseeable future until the U.S. kind of gets back to producing enough soybean oil that that it will not need to import as much as we're expecting it will need to import over the next several years anyway. So here's the Argentinian balance sheet, and a couple of things to point out here is obviously our forecast for record production. Again, that depends on farmers' willingness to sell their soybeans to the crushers, and then the crushers actually producing that amount of soybean oil. You can also see that non-biodiesel usage we expect to continuously grow. 22, 23 might be a little bit optimistic, but much in the same way that the U.S. non-biofuel end users can sort of outbid the biodiesel users. The same kind of dynamics are at play in Argentina, and with the potential slowdown in biodiesel production, we think that more soybean oil will be available to the domestic market for non-biofuel use. Now, even if the farmers do sell to the crushers, there's something that could also prevent them from crushing, and that is effectively oil share. And this also applies to the U.S. Right now, if you look on the at the cash markets in the U.S., cash oil share is hovering just below 50%. And what that really means is that crushers are going to match crushing volumes to soybean meal demand rather than soybean oil demand. And they do this for a couple of reasons. One, because historically soybean meal has provided the larger percentage of the total overall value. So historically, the oil share has been around 30% of the total, and soybean meal has provided about 70%. Maybe a little bit more, maybe 35, 65. But with this rise, there's a question of, will crushers start to crush to meet the demand for soybean oil? And at 50%, I think you could start to, I guess at 50%, it's logical that they would start to match demand with oil. But there's a difference in the storability of vegetable oil and soybean meal. And so if crushers produce more soybean meal than is needed, they can't really store it for a couple of years like they can with vegetable oil. And so I think that oil share probably needs to rise even further, probably to 60, 65%, maybe even a little bit higher, before crushers really start to match the demand for soybean oil with crushing volumes. If we don't get oil share up to that level, then it is, in particularly in the U.S., it's going to be difficult for it's going to be difficult. The supply is not going to be sufficient to meet the demand. And that's why I think that it's probably likely that oil share continues to rally as we go forward. All right. And with that, I will open it up for questions.